Thank you very much for being a part of Market Day Report and a part of the family here at RFD TV and Rural Radio. Channel 147 on Sirius XM, as well as the Sirius XM app. We are glad that you've joined us here today, and it's time to find out where these markets stand as we wind down a trade week. We'll go into the latter part of the day here, latter part of the day trade anyway, with May corn down 4 1/4 at 378. New crop December corn down 4 1/4 also. It's trading at 403 3/4. Again, we are only 3/4 of a penny away from the low of the contract. We've been here earlier today, come off of that a little bit, but now weakening again. May soybeans down 8 at 10.29 1/4. November soybeans at 10.36. That's down 6.5 cents. For the Chicago wheat market, May down 8 3/4 at 4.68. July Chicago wheat down 9 3/4 at 4.81. In the Kansas City wheat market, the front month of May is down 10 1/4 at 4.85. July wheat 504 1/2, which is a penny and a half off of the low, but that is down 10 cents. The high of that contract is 514 1/2. For the Minneapolis wheat market, May is down 9 1/2, 603 3/4. July Minneapolis wheat is down 10, 609 1/4. Big day for the cotton market today as well, and May cotton up 146 at 84.43. December cotton is up 62 at 79.21. So now let's check in with Scott Gecas. He is in Chicago, and Scott is with Longleaf Trading. Scott, first of all, when we look at the charts of the row crops, and I'm predominantly talking about corn and soybeans here, was there this much air underneath this market as to what let us fall, or is it just a lack of anything new and fresh for the bulls to hang on to?
I think there's a lot of different reasons. You know, the trade war talks still looming. The strength in the dollar today is pretty much driving all the ags, straight down. It's very interesting to see all this, some of the news coming out. With soybeans in particular, the trade war talks saying all these tariffs, moving forward. The tariffs right now are staying at about 13%. They're not even at that 25%. China's still importing soybeans from the U.S. I think they imported roughly around 321,000 tons of crop from the new crop coming in. So that's pretty significant. It's still, strong demand overseas. I don't see the reasoning behind this big move in the soybeans, other than the supply concerns. The weather still is a factor. You see that dry weather in Argentina. They had imported U.S. soybeans for the first time in a very long time earlier this week. So you're still seeing that demand. I think this sell-off is completely overdone. Coming into May expiration, though, I wouldn't be surprised if May soybeans pin at around 1040. They have a large open interest on that 1040 line, about 27,000 contracts. So that usually tends to gravitate towards that large open interest. We are below it right now, but we're going to see where we close later in the day.
You mentioned the dollar, and here when we checked it just a few moments ago, we saw where this dollar was pushing higher. You had already mentioned that as let's look at these numbers. Right now we're at 90 and 60 on that front contract. So we're up 370 points, and starting to close in on that in the September as well. We're up 320 over here at 89.580. So we have probed back above 90 here on the front month of the dollar.
Yeah, and the dollar's having a lot of strength. There's still a lot of inflation concerns are coming back to light, recently. So we're going to see what happens with the news as far as global news coming out over the weekend. No one knows if there's going to be any type of tweet from the U.S. president, any type of retaliation from Russia or China. So there's still a lot of extreme volatility being in place in the market. I wouldn't be surprised if you see a lot of protection being bought going into the weekend at the close.
Scott Gecas here with us with Longleaf Trading. And Scott, when we come back, let's talk about the livestock market. So we're going to get to that. Stay tuned. We'll be right back here on the Market Day Report. Let's go back to the edge of the trading floor in Chicago, where Scott Gecas with Longleaf Trading is standing by. Let's first start in this cattle market. We'll look at these numbers. Live cattle today under quite a bit of pressure. We've said that throughout the morning here. Not as much, though, as yesterday. June live cattle right now down 35 at 102.65. August down 34, 102.78. October down 50, 107.15. So, Scott, that June live cattle contract goes all the way down. It gets down to as far as 101.63 for a low in that contract. That's within a stone's throw of of a little bit of chart support here. Bounces off. Are you encouraged by that?
I think so. I think the cattle market as well as the hog market, I think it's the same thing with the grains. You know, it's a little bit overdone. You know, the cattle market, the only thing is there's still a lot of supply concerns. You know, cutout value was the lowest since 2016. Weights are about 20 pounds higher from last year. Cumulative sales are still up about 17% versus last year, though. So you're still seeing that a little bit of consistent demand. You know, going into later on in the summer here, starting, they're expected a strong demand for, you know, up in the summer months in the Midwest, grilling seasons and so forth. So we're going to see how this is going to play out.
All right. You mentioned the hog market. Let's find out first what's going on in the feeders, and then we'll get to the hog market, because I want to get your thoughts here as well. That feeder cattle market for May is down 10, 138.32. August down 65, 143.05. September feeder cattle down 75 at 144.25. Now on to the protein, or the hog complex here, I'm sorry. June hogs down 28, 77.80. July down 40, 80.30. August down 17, 79.85. So is this a market that's looking for another, maybe a consolidation here? You know, we saw kind of a reverse head and shoulders on this chart here recently, and some were watching to see if we'd just go straight up from there.
Yeah, and that's all going into, you know, the expected stronger demand going into later this month, as well as going into May. You know, some traders are pricing that in already. So with that being said, yeah, I definitely think that there's going to be a consolidation period for at least the next week or two. See how this is going to play out. But the hog market's being dragged down by the cattle market. That's been the main focus. The feeder cattle is bringing everything lower. So we're going to see how this is all going to be being played out.
It was interesting also to see here at midday, the pork cutouts were almost all lower, with the exception of the bellies, I believe it was. That kind of also kind of sets the tone. The belly market actually up $1.46, but the carcasses, loins, and hams all lower.
Yeah, and you know, with the with the hog market in particular, what really sparks my interest, what was coming out today, is there's delayed farming practices in China. They're actually shutting some farming down as far as, you know, breeding hogs and stuff like that. So, you know, you're going to see that demand pick up globally within the next few weeks here, I think.
Scott Gecas with Longleaf Trading here with us at the edge of the trading floor. Scott, always good to talk to you. Thank you very much. Appreciate the input.
Thank you.
What about that crude oil market? We've been talking about that, and now yesterday crude oil probed above some of the 3-year levels. Well, right now, May crude oil backing off by 13 cents at 68.16. June crude oil down 9 cents at 68.24. The rest of those contracts, Christina, are all starting to soften a little bit here.